This is your LMAX Exchange technical update for Friday, November 4th, 2016. Euro dollar. So the euro has rallied up to some key resistance, a confluence of resistance up in the 111 area. You can see that we've come into some previous support turn to resistance up here, along with the 100-day and 50-day moving averages. And so ideally over the coming sessions, the market now looks to top out, put in a lower top, and start to head lower back down towards those recent lows that we saw at 108.52. Sterling dollar. So cable is broken higher, breaking a period of multi-day consolidation, and this sets the stage for a fresh upside extension here back towards the previous base at 27.96. At this point though, it would take the establishment back above 27.96 to really alleviate downside pressure and negate the downtrend. Until then, there is risk for another topside failure and bearish resumption back down towards the recent 31-year lows around 120. Dollar yen. So dollar yen is broken down after trying to establish back above 105, and this does suggest that the market could be poised for fresh downside back towards a retest of the 2016 lows at 99. At this point, it would take a break back above the recent high that we saw all the way up around 105.53 to put the pressure back on the top side. Euro Swiss. So Euro Swiss is now trading back into the familiar range after a dip below that 108 area. Ultimately, over the past several weeks and few months, the market's been very well confined between 108 and 110 with little breaks on either side. But overall, again, the market remains confined to this range trade, and if we remain supported here and break back into 108, we could see fresh upside over the coming sessions back above 110 or back towards 110 towards those range highs. Aussie dollar. Aussie dollar has been chopping around, hasn't really shown any clear direction, but the market has been very well capped on rallies above 77 in 2016, and so we could continue to see that. Ultimately, though, we would need to see a break back below 74.21, that's the low going back to the 27th of July, to put the pressure back on the downside. Dollar CAD. So dollar CAD remains highly constructive as the market continues to break higher. At this point, the pressure remains on the top side with a push towards the 135 to 140 area seen next. Any setbacks that we do see in the sessions ahead should be very well supported ahead of 130. Kiwi dollar. So the New Zealand dollar is broken up in recent trade, but overall it's showing signs of topping out in 2016, and as the market rallies up now, there is some good internal resistance that comes in the 73s. So if we do see a lower top, it would be expected over the coming sessions in favor of fresh downside back towards key support, which now comes in around the 70 area. SPX 500. So the S&P 500 has been breaking down this week, and the risk is now for deeper setbacks in this market towards next key support in the form of that 1990 base in June. At this point, any rally should be very well capped with only a breakback above the 2155 area to compromise this bearish outlook for the S&P 500. Gold. So gold looks to be constructive as it tries to break higher after basing out by the 1240 area. Ultimately, the market is expected to trade back towards the 2016 peak and beyond. That 2016 peak comes at 13.75, and a push above there will open the door for a move towards 1500. Any setbacks again should be very well supported now above 1240.